First off, I'd like to go ahead and welcome everybody. Many of you attended last week's seminar, webinar, and I appreciate that. And so a lot of the things you learned last week will go ahead and then feed into this week as far as the individual indicators and stuff like that. Certainly the exposure you got last week will help this week. But for those of you that didn't go ahead and attend last week, don't fear. We'll try to go ahead and keep it, simple enough and avoid complexity where not attending last week won't go ahead and hurt you, okay? Try to keep that environment going. What I'd like to do is go through a couple of slides with you here this morning to get us kicked off. And the first thing is, obviously, need to go ahead and share with you the boring stuff for many of you, I understand, but I need to go ahead and share because it is, while it may be boring, it's very important. It's important you understand futures trading, equities trading, options trading, currency trading, etc. They all have a lot of potential for rewards, but they also have large potential, risks as well. You need to be aware of those risks. You're responsible for your own trading. You guys have heard me countless times in the past go ahead and tell you, and I can't emphasize that enough, that you need to go ahead and speak to a registered financial advisor and consult your risk trading plan before you do something. I am not sitting here going ahead and soliciting you to buy or sell anything. And I want you to understand, talk to a professional, talk to a broker. Guys like in Infinity, you guys, many of you have seen in my chat room, I have my broker actually right there. He two of the people, I had a commitment from them to go ahead and have some support available for people. And so they're there to ask questions. You don't have to have an account with them. They'll be happy to go ahead and answer your questions. And so if you need financial advisor help, either go ahead and find one on your own or go ahead and talk to guys like that, and Russ Carlson and that from Infinity, who's in my chat room throughout the day, and Andy. Both those guys are great guys. So just want to make sure you keep that in mind. That there's a lot of reward, but there's a lot of risk involved, and you need to understand those. I do go ahead and, as you know, I'm going to offer up this webinar freely to each and every one of you. I would appreciate it. You guys all paid to be here, so I would appreciate it if when you go ahead and either watch the webinar or you download it to your computer or your CDs. I'm perfectly okay with you guys going and doing that. All I can ask is I'd appreciate you guys don't go ahead and share it with anybody outside of yourselves. If you do need to or want to share some of it, just send me an email. You guys all know I'm a pretty easygoing guy, so just let me know so that I don't get any nasty surprises down the road or anything. So let me know, and I'll help you out with whatever I can. Today, what I want to do is I put a survey out in the channel yesterday, asking people when it relates to stops, entries, and exits and stuff of that nature, setups. What are some of the things that you'd like to know? And what I did was I got hit with a lot of different types of questions across the board. I tried to go ahead and narrow that list of questions down. There was a lot of them. I tried to narrow them down because a lot of them were just duplicates of the same thing reworded differently. What I'd like to do is open up today and kind of go through many of those or all those different questions. Then I'd like to discuss a little bit about my scale-in strategy, or a lot about my scale-in strategy actually, and also then thoroughly discuss the infamous two-bar break strategy and variations. I've been putting YouTube videos out there, as you know, for 7-8 months, and I still see many people wondering, is that a two-bar break? Is that not a two-bar break? And this group here, of all people, I want to have, more knowledgeable on those breaks. So, and variations of the break, and that's even more important. I've mentioned in the past that there's many variations that can be traded off of, especially then using my scale-in strategy. So I want to make sure we talk about that. Then as time permits, I also want to talk about additional support and resistance trades, moving average trades, including my speed lines. I'll share with you what those are. Pivot point trades, and also another concept I want to introduce to you here called fishhook trading. So we're going to probably take a couple pauses, and like I said, my voice last week kind of gave out on me, but we're going to go ahead and we're going to keep going as long as we can here. My only commitment is that I have to be out of here around 12:30 Central Time, so 1:30 everybody else's time. But even though this is a 2-hour webinar, I'll keep going as long as I can. So, trying to give you guys everything I can back. If you have a question, go ahead and send it over to Todd and Robert if they feel it's something that needs to be to kind of stop the flow of things. We will stop the flow of things, and they'll use the judgment on whether to do that or not. And then the only other thing is I've gotten to know most of the people that have actually joined this room today. So there's a few of you I don't, but so for those of you that I don't, just understand this here is not a contest, this or a forum for an argument. And what I mean by that is, I'm going to be teaching you concepts on how I trade, actually apply my strategies, and you may or may not agree with some of those strategies. They work for me. You may have tried a similar strategy in the past or a different tweak to a strategy, and it may not have worked for you and you don't agree with it. Just understand, that while I completely understand that you may not agree with the strategy, it's what has worked for me. And just like my charts last week, I shared my actual trading screens with you, the indicator settings, the levels, everything. I shared exactly, the real deal, kind of how I have it all laid out. This week I'm going to share strategies that I use, and they've worked for me, and so we're all here to go ahead and learn a little bit about what I do. And so just kind of keep that in mind, and have an open mind and apply whatever you learn here as you see fit. I've noticed, I think a lot of you have seen, like in the YouTube comments and stuff like that, people have gone ahead and taken my strategies and married them with theirs, and I've encouraged that the entire time. This is not one of these guru systems where you do as I say. This is what works for me. Let's see what you can find to incorporate into your trading. Piggybacking off of some of the things I have to offer, and make a better fit for you, because trading is just as much psychology as it is looking at indicators or price action or anything else, because in the end, whether you pull a trigger or not is based in part on fear and greed and such. So same thing with the whole concept of the indicators and the setups and everything. It has to be something that fits your mentality, your methodology. So take the parts today that you've learned, that you'll learn along the way, and apply them as you see fit. Just want to go ahead and on the topic of indicators, I shared this last week in my indicator webinar, that indicators, I know we have a lot of new people, and then we also have seasoned people. But one thing that I noticed that a lot of the new people like to do is gravitate towards indicators. And you know what? I was the first person that did that. Being a very mathematically orientated type person, I loved looking at indicators. So I went out and I owned TradeStation and everything in the mid-90s, and I was building my own code with easy language, and subscribed to their different services, and it was all about indicators, and there was always something missing, and in the end, I feel that what was missing was, price action itself, especially in something like the S&Ps, where price action is very helpful, actually. And I'm not talking so much about like tape reading per se. I'm just talking about watching the chart form real time and watching how it's acting as it's trying to break to new lows or break to new highs, and then it pulls back real quick to a support level and then launches back off again. That's what I'm referring to with price action. I'm not encouraging anybody to go out and become a tape reader, okay, just so you understand. But I think the best combination is looking at setups around the indicators and then seeing if the price action agrees. So I just want to, in the end, say don't rely on indicators alone. The biggest problem is a lot of people want you to believe that just buy my magic indicator, give me $2,000, give me $4,000, come to my $5,000 or $10,000 seminar, I'll give you my indicator package, and you're going to go make millions. Well, as you all know, there's no inkling of any of that kind of, stuff on my website. I don't promise making millions. I don't promise losing millions. That hype and stuff like that, I think, needs to be thrown out the window. But then I also think the concept of you just needing this magic bullet indicator needs to kind of be thrown out the window as well. So it's kind of a, just a statement of a fact that I want to put out there for you. And what we're going to do now, in keeping with the agenda here, I've got these questions, and Robert or Todd, if there's something that comes up, you guys just kind of let me know. I'm just looking at my screens. I'm going to go through these different things. So give me just a minute to kind of switch gears to a different screen, everybody. Okay, hope everybody can see that. Actually, what I want to do, let's do this. Make it easier for everybody so when I'm flipping back and forth. Because in this segment here, I'm going to be flipping back and forth between my charts and the actual questions. So what I'm going to do is I'm going to go ahead and go through, like I said, this is the condensed version of the numerous questions that were asked yesterday. Some of them are questions, I think some of them might be a little more comment orientated, but we'll try to go ahead and go through all these different things, and then we'll get on to, and I'm sure many of these questions are some things that many of you have thought of or asking along the way. So I haven't really, like I said, I've spent right up till this morning, since you were still sending them till this morning, preparing them, merging them together. So I haven't really looked at them, so we're just going to take these on the fly and share my opinions with you along the way. So apart from support and resistance levels, what do you look at to determine to place a stop? Well, that's a good question.
Robert?
Let's go ahead and get up one of my primary trading screens here. You'll go ahead and notice that one of the things that I use, and let me go ahead and actually put a marker up here real quick. A couple of things that I use for determining stops are the moving averages themselves. Okay, and what I'm doing is, if, for instance, let's say I'm looking at going ahead and buying the rising 20-period moving average. Okay, we've had a decisive break to the upside. We go ahead and we have a pullback. Well, these two speed lines here, this was the speed lines I was referring to earlier. You guys learned the settings on those last week. What's happening is I'm looking then to these as either short-term or longer-term support and resistance levels. So one of the things I'm doing with the support then is, if it's broken to the downside. So if I'm looking at going long here, this then is also an area where I try to base stops off of. And what I'm really looking for is a confluence of support or resistance levels. Then I know what should be happening in the market. We talk about, I've talked about to you about the concept of, if what you expect to have happen in the market doesn't, get out. And if you're not in, look to reverse your trade. Okay, so let's think about that concept for a minute. We've got this rising 20-period moving average after breaking out. What I'm looking for is a pullback to the 20-period moving average, and I'm looking then for it to bounce off the 20-period moving average. That's what should happen. What I would not expect to have happen would be that it breaks through the 20-period moving average, and at this point, this 1241 support level. You'll actually recall I've been talking about the 1241 support level for several days, and look how well it worked actually in trading, yesterday. So I don't know if everybody caught on to that, but you see here, it hit here, broke here, pull back here, here, and here. So that 1241 was ultimately important. Well, so I'm looking for this confluence of, in this case, support. And if we break through and we close below a major support level of mine, so if this would have broken through and actually closed down in this area, and now your stops, your risk reward ratio is kind of depending on what you're looking for. Are you scalping this? Because what a great scalping opportunity generally around a lot of these moving averages. And some of you have asked about scalping strategies. So, but if you're looking for a tick or two, are you going to let this thing go against you 3 points and close all the way, down in this area down here before you exit? Probably not. But what you're going to go ahead and do, though, is have to gauge how much profit am I looking for and try to keep those proportions in whack. Now, if you're a tick trader and you're trading for 1 or 2 ticks, you can't just let it go 1 or 2 ticks beyond you on the support and get stopped out. If you have a 1-to-1 ratio there, you're likely to go ahead and get stopped out very, very frequently if you're a tick trader. And I know some of you are based on the questions that you had. So try to keep in mind, though, as we look at what other things I'm looking at other than traditional my support and resistance levels, I'm really looking for a confluence of support or resistance levels and then a break of them to the wrong side. In this case, I'm looking to go long, and then I'm looking to see if it's going to go against me and close down here. So same concept here. If this bar would have closed down here, I would have been done. If I was going long here, I did not go long here. Just so everybody knows, I don't mean to misrepresent that. I did not go long here yesterday, but I'm saying if I did go long here, we got the rising 50-period moving average, as well as right above support. So if I went long here and then all of a sudden we close through here, even though it's a 1-bar close, it's done the wrong direction. It's gone the wrong way. So a couple of things I'm looking at are moving averages, in particular the speed lines, the shorter term moving averages, and then the longer term ones. Those are a couple things I want to make sure you understand that I'm looking for, as far as where I set my stops. I usually want to be, you don't need to be too far beyond, because if the bar closes down below it, you're wrong. Your opinion was wrong at that time. If it ultimately goes back up, then you look for a reentry. In fact, there's a great setup right here, and I want to make sure I share that with you a little later. So just understand that when you have multiple areas of support, you don't need to let it go very far beyond that area of support as far as on a closing basis, because if you're right, the trade is going to work fairly quickly. As you've seen throughout our trading sessions, the 20-period moving average, for instance, gets honored very well, especially when combined with a support level. So if it breaks through and closes down in this area, something's gone wrong with the trade. News announcement, the analysis was just wrong. Sometimes the setups just don't work. More often than not, in my opinion, they do. But if it doesn't, then get out and then look to either take a trade in the opposite direction, or at least you're out and not inflicting more pain on yourself. And that's a theme I want to continue to impress on people. Okay, so let's go ahead and go back. Best trades on a risk-reward basis. Well, the highest probability trades from my perspective are when you get like the 2-bar breakout as an example, and then you go ahead and get a pullback to, in an ideal world, when you want to talk about the best trades are the ones that come all the way back to a solid support level. In this case, as we're looking to go long, a solid support level, as well as a support resistance level. So when I think about best trades, the best trades to me are where we get multiple areas of support or multiple areas of resistance. In fact, you guys will recall just the other day I did a webinar in the morning hours on Wednesday, I believe it was. It was the day my mom was in the hospital, and you recall, right in that video, I actually showed how what was making me want to look at the sell side on something like that was, and my concern was the multiple areas of resistance that were coming down on us. And sure enough, within minutes of me doing that video, as you know, we sold off pretty nicely right down to that support level. So I'm looking for confluences on multiple areas of support or multiple areas of resistance if I'm looking to go short, where we can combine a support and resistance level and a moving average. Those are the highest probabilities. Those are the best trades. Okay. Clear names for setups. Well, I have not officially named my two-bar setup strategy. But if people have an idea what they'd like to name it, I would certainly be willing to go ahead and entertain naming it for people. And then the other strategy that I was going to share today, the fishhook strategy, I guess I kind of did give a name to it just because I've called it that for many years. So that one I guess is kind of sort of named. But if anybody wants to help me name my two-bar strategy, you're welcome to go ahead and either email me at students@powercharting.com or send the email through the note through the questions tab right here. Actually, it would probably be better because all those are archived for me and I can look at them later. And Todd can help me and Robert can help me pick the name that fits. So do you choose your entries up to the tick precise? At times I do. But not most of the time. Let me explain my style of trading for you a little bit. Maybe that'll help. What I do, you know what? Actually, let me close something here. I kept this open in case any of you tried to contact me last minute earlier with password issues and such. My style of trading is, and you're going to see in a little bit, I trade everywhere from a couple of contracts to well over 100 contracts, okay? And you're going to see actually even yesterday where I didn't think I was going to trade, I ended up doing some light trades, and then I ended up going ahead and I think my biggest trade of the day yesterday, you know, it was still a day where I didn't want to get too aggressive, was about 85 contracts. So, and you're going to actually see my my trading slip or whatever from that. But going back to my concept is, I prefer to identify trends and go ahead and jump on in the direction of a trend. That's my overall style. I know some people are just kind of scalpers back and forth. They'd prefer to go ahead and bounce between. Let me pull this up right here. They'd prefer to bounce between a support and resistance level and just go ahead and, you know, scalp back and forth in a channel of sorts. And you know, whereas my style is I want to jump on the trend where possible. And now yesterday was a day where I didn't think there was a trend going into the morning because of this massive blow-off. In fact, that's what led me to go ahead and put my commentary out there originally. We had this huge blow-off in pre-hours. I'm just like, you know what, that's madness. This thing is hyperextended. In fact, this looks like the oil chart if you think about it. It was going ahead and rallying up, then it kind of went parabolic, and then it went hyperparabolic. If any of you recall my oil chart that I showed you previously, not today, but in the past sessions and in my YouTube videos, that's the exact same thing we had in the, you know, S&Ps yesterday. So, you know, I'm just like, you know what, there's no way I'm going to go ahead and mess with that. When we're lock limit up, people are being told they can't short certain stocks and everything else. It's like, I'll step aside. And frankly, I had a lot of you I was trying to take care of, as you know, with getting registered and everything else. So, but, you know, what I'm looking for, though, is a trend, and except when we go hyperparabolic, then I usually step away. I'm looking for more of that 45-degree angle type trend. You get a thrust, you get a pullback thrust, usually off the support. You know, this is just one example of it over the last couple of days, but it works, you know, very well time and time again. In fact, for those of you that were in my webinar last weekend, you'll recall I mentioned that the you know, a lot of these indicators, these ones you can go buy on the market, you know, if you just put yourself up a simple 20-period moving average in that, and then color the bar blue if it's above the 20-period, and color the bar red if it's below the 20-period, you'll be just as in the know, if you will, as what some of these, you know, very expensive indicator packages are out there that are offered. So, And I hope some of you guys took the time to do that and see what I was referring to. So just understand, I'm looking for a trend, and I want to kind of put that out for you. That's kind of my style. I do take very short-term trades. There's no question about it. But what I'm looking for is bigger trades where I can get bigger size on, okay? So when we come back to the question of tick precise, usually a tick doesn't matter so much to me as I'm looking for more than, I'm not trading for a tick or two. If you're trading for a tick or two, precision is key. But when you're looking for larger point, moves, or you're scaling into a move, the tick is not as important. Do you ever take entries
excuse me, Robert?
levels like trend following? Yep, actually, we just kind of answered that question. I certainly do. For each strategy,
Robert?
what's the ideal entry and exit? Well, I guess we'll kind of talk about some of those as we go along here.
Robert?
More importantly, what do you do when things don't go as planned? When to get out? What makes you stay in? Okay, well let's go ahead and revisit that issue for a minute. This is important because what I find is one of the biggest concerns I have with day traders, whether it's equities or whether it's futures, is they tend to go ahead and they cut their winners short and they let their losers run. Nobody else can see each other's hands in the room here. So I tell you what, if everybody do me a favor real quick, how many of you have gone ahead and done that? You cut your winners short. Raise your hand. Only me, Todd, and Robert can see it. How many of you have gone ahead and done that where you've let your losses run, but you cut your winners short?
Robert, can you hear us?
Okay. Yeah.
Robert?
So, and frankly, we've all been there at one point or two. But for longevity, that's not the way we want to go ahead and play this game. So what we want to be doing is going ahead and saying, if what doesn't happen in the market, what I expected to have happen, doesn't happen, I need to get out. And in part, you have to sit down there with your advisor and your risk trading plan to determine, is a 1 point close below this support level where you're done? Is a 2 point close below this level where you're done? Or were you going for a 10-point move, so you're willing to ride it down to this rising support level here because you could shore up support here, go ahead and scale in a little bit more, and then as it comes back up here, exit without going and taking a lot of heat on that. So there's different styles there. Frankly, that's as I look at this right here, just so you're aware, that's probably what I would do if I were starting my purchases here. In fact, you're going to see examples of me scaling into trades. Almost all my trades, because of the size that I trade, are scale-in trades. Just so everybody understands that. I don't trade 1 contracts, 5 contracts, 10 contracts, 20 contracts. As far as the overall size that I trade a lot more than that. So consequently, I need to sometimes scale in. I like to scale in because if it moves in my direction right away, like you'll see actually a couple of my trades did, well, okay, I may only get 4 contracts off or 10 contracts off or 20 contracts off. But fine, you know what? I made money on the contracts that got in there. If it continues to go ahead and pull back a little bit, I can scale in and get more at a better price. And I'm not talking about, I want to make sure I'm clear on that. I am not talking about sticking with a loser, okay, where the indicators and everything is starting to turn against you. Let me go ahead and actually get a drawing tool. I want to be very clear on that point so nobody misunderstands that. Because I can see there's an opportunity for, disaster with that if people don't understand clearly what I'm saying. Okay, if right here the trend is up, okay, so and also the longer term moving averages are up, and we got some key support here and key support here. If it breaks through this support level here, I still have strong support a few points away. A few points from my perspective, okay? And so if I go ahead and I buy my initial buy here, and I see that the overall trend on the day in this market is up, I still have the ability to go ahead and purchase down to about this level. Now, we break this level, and it's game over. But usually what happens with the S&Ps, as you see, like right over here and right over here, They like to go ahead. They like to have a 1-bar breakthrough, and that's why I have the 2-bar strategy. They like to have a 1-bar breakthrough sometimes of key support levels, and then what do? They turn right back around. So if you're in an uptrend, they have a 1-bar break. What does that do? It gets people faked into the downside. Oh, I got to sell. How many people have done that? I hope nobody did that, yesterday where they got caught into this uptrend here. I actually went ahead and did trade this myself, and I want to go ahead and see if I can clear the screen.